What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Wednesday, November 17th. As always, guys, nothing that is discussed on the channel is financial advice. It is simply financial education that I then hope people will use to understand you don't have to slave in 9-to-5s if you don't want to. You can easily hustle 24/7 in the market and still accomplish all those financial goals you've set for yourself. As with anything else in life, you're always going to get out whatever you choose to put in. But let's get into this, man. I'm excited about this play today. So as you guys can see from the top left corner, this is SPLK, otherwise known as Splunk Incorporated. Some of you may know this play, some of you may not. If you do know this play, you probably also know that on Monday it suffered a 17% drop, or otherwise this enormous red candle, right? We're going to get into why this happened and what I feel this really is specifically. But again, this is a 2-year look on a 1-day chart. So essentially this spans 2 years. Each candle on the chart represents a day. This massive dip you see back here is COVID dip. I've shown this dip to you guys before on many other charts. March 17th, March 16th, essentially just about on every chart shows you exactly what fear looks like in the stock market, right? This was fear shown exactly in a tech play. As you see back before COVID, this play was trading at 176, which actually matches what it was just recently at, maybe not even a week ago, right? This is essentially pre-COVID where it was sitting and stabilized at prior to this massive dip before it went on this tear over a 4-month period, reaching $225 a share. It literally went from $94 in 4 months all the way up to $225. Don't you just wish you would have dropped money into this play? I mean, I do. Every time I look at one of these charts, that's the only thing I think about. Why didn't I put more money into these plays? Because you would have literally tripled, quadrupled, or 5x your money literally in a very short amount of time, right? But as you guys can see, Splunk has recently fared, or I guess in most times, fared over the 50-day moving average, which is this green line. It's used it as resistance or support, excuse me, for the vast majority of its trading period. Recently here, a year ago, what is it, December last year, it was actually using as a resistance. As you see, it kept bouncing off of it and rejecting, bouncing off of it and rejecting, bounce, reject, right? And then recently here in June or midsummer, it started using it as support, bounce, bounce, bounce. And now we recently broke through again with the 17% correction, right? So some of you may be wondering, what is Splunk, right? So I actually have a little short video we can watch that'll tie everything together for us to know exactly what Splunk is. So let's take a look.
Right now, events that could affect your business are happening everywhere. Data is happening across devices, systems, and interactions. And you're probably spending too much time managing that data. Wouldn't you rather be putting it to work? Meet Splunk, the Data to Everything platform. It can help you turn data into doing, so you can make IT, security, and every part of your organization work better. But where do you start? First, you need to know what's happening. Splunk's investigative approach means you don't have to structure your data before you ask it questions, and adding new data sources on the fly is easy. So you can add data from here, here, and even here. With countless sources at your fingertips, you'll find insights that can help you improve service levels, reduce costs, mitigate threats, and deepen customer understanding. And insights are just the beginning. The Data to Everything platform is built to get stuff done. It's loaded with features and tools that fully harness the power of machine learning, automation, and orchestration, so you can make faster decisions and take faster action. And because it's all on Splunk, you'll have less complexity to manage, which brings us to the future. Data is a big part of our lives, and it's going to get bigger. By investing in technologies like mobile, augmented reality, and natural language processing, Splunk is enabling more types of users to access more types of data. That's the power of the Data to Everything platform. Discover what innovators at organizations everywhere already know, that when you bring data to everything, anything is possible. Let's turn data into doing.
So that is Splunk, right? Some of you may still not know who Splunk is. That's fine. This is one fact you should know, though. 91 of the Fortune 100 use Splunk to bring data to every question, decision, and action they take in their businesses, right? They have business with a lot of very large companies. pretty much any company you look up that does business with Splunk specifically, right? Their products include all these listed here, right? IT operations, security, AI. They're diving into a lot of different segments. Cloud, right? Specifically, they are going through a transition, right? Splunk used to be just a software that you could purchase. Now they're going software as a service, right? Which comes into play as to why they had the 17% drop on Monday. So as I've shown you guys in a lot of different other charts or in a lot of different other videos, right? Emotions are high in the stock market, right? Small changes that we see as small to the stock market can make very big impacts, right? One thing the stock market does not like are leadership changes, right? So as you go in here in Thinkorswim on the 15th, you see this article that is published. It says Splunk is trading significantly lower on Monday after the company announced CEO Doug Merritt will step down, right? Anytime there is a leadership change, you're going to see a rundown in stocks, right? Why? It's seen as a very negative catalyst, right? Something very dangerous. You're changing the leadership of a company. That means the dynamic is changing, the power structure is changing, the vision is changing, right? It's seen as a negative, right? However, pay attention to the article, right? Because it tells you a lot of really important information, right? Merritt will remain with the company in an advisory role to ensure a smooth transition. That should tell you one thing and one thing only. They're not leaving on bad terms. He's staying as an advisor. It means they're still on good terms. That means he's still going to be part of this company and the vision for it, right? The reason for the change, as I mentioned, they're going from an old school type mentality to a new school type mentality, right? And for that, you need new blood, right? A CEO that is built for that, right? Someone like specifically Graham Smith, who has been named interim CEO and is actually coming off the Splunk's board of directors, right? Who is Graham Smith? He only used to work for another SaaS type company, Salesforce, right? So he has experience in the sector. He has experience for this vision of where the company wants to go, which is only going to help drive them better towards that goal, right? You have to look at it from that perspective. Some of you may also know Splunk. Back about a year ago, Kathy Wood sold out of her position in Splunk completely, right? However, you will note the other article that was released today, early morning, right? It says Kathy Wood, ARK Invest, completed the sale of the bulk of its remaining stake in Zillow and Open Door Technologies, including the firm's disclosure of flagship innovation ARK, right? Sold 94 of its holdings in Zillow, 30 million shares of ARK FinTech or ARK F, sold 9.2 million of shares of Zillow. The ARK fund also sold 13.2 of Open Door. By contrast, the 18% stock tumble in software company Splunk after the departure of Doug Merritt was seen as a buying opportunity. ARK Invest Internet ETF bought $17.2 million worth of shares of Splunk, right? So obviously Kathy Wood likes this change. She sees where the company is going now, likes the new leadership change and the vision towards it, right? So she immediately picked up $17.2 million worth of shares. Obviously, it's a buying opportunity, right? To me, this 17% drop is literally the stock market saying, here's some free money if you're willing to take it, right? You just got to do the research and the work, right? Now, I didn't show the volume profile to start the video because I wanted to save it towards the end. I think this is a pretty good transition into that because now you'll see that the 17% drop actually even makes more sense. Why? What have we always said about the point of control? When you're trading above it, it tends to pull you down towards it. When you're trading below it, it tends to pull you up towards it. We'll take a look where the point of control is. So this is the point of control over the 2-year look. As you see, the red line is where the highest concentration of volume is. Take a look where the 17 drop dropped us to and where the green candle today that we had formed, right on the point of control. As always disclosed, right? So again, we're in a pretty safe spot at this price mark, right? Think of it as going back to zero and starting fresh, right? Or at least that's the way I'm seeing it, right? This is my opinion. This is how I'm viewing it. You don't have to take my word as fact. Please do your own research. Please do your own due diligence, right? But as I always like to show you in all of my videos, let's get with some smart money targets and see what they're thinking, right? So if we go into Nasdaq, as we always like to do, you see that they do have a consensus strong buy on it with some price targets of high of 225, an average of 184, and a low of 153. We're at 141 that we sit at today, as you see up here. That is still upside in every single category, right? Moving along, going into Marketbeat, they also have a consensus of a buy with 29 analyst ratings. As you see over here, low of 125, so that's $20 down essentially from where we are now. An average price of 178 and a high of 225, right? Take a look at the breakdown by month. So for this month specifically, you have 17 buys, 12 holds, 0 sells. 178 price consensus with a 26% upside from where we are now. Last month, you had 17 buys, 11 holds, 0 sells. Again, 177. So we actually went up $1 from a month ago. That last month was 20% upside. 3 months ago, you had 21 buys, 11 holds, 0 sells with a 185 price target, or otherwise a 24% upside at that time, right? Obviously, back then we were trading a little bit higher than where we are now, but the consensus should still dictate to you it is still bullish in flow. Again, this change I feel is a great change for Splunk. I think it'll push them forward faster. Their earnings were great. They have no negatives, no scandals, no bad issuance, no share offerings, nothing of that sort. You dig through the headlines, you see nothing but positive articles. Again, 91 of the Fortune 100 do business with Splunk. Always keep that in the back of your mind, right? Obviously, there is some institutional ownership. As I mentioned, you won't find any BlackRock, you won't find Vanguard, you won't find Renaissance Technologies, but you do have other funds that are heavily vested specifically in Splunk, right? ARK Invest, I just showed you, picked up 17.9 million shares of it. So again, they're now going to be reporting as of next quarter. You'll see that they're showing ARK Invest being a holder or institutional investor in Splunk. If you want to know some of the competitors Splunk competes against, you have VMware, which just recently broke off of Dell. You have Datadog, Elastic, Intel, BMC, Micro Focus, IBM, Microsoft, ServiceNow, right? Just kind of give you some competitors. If you go looking at some of these price targets, they're way up there as well, right? So again, you got to remember the category that Splunk is competing in, right? But as I always like to do in all of my videos, my favorite part is going into the flow, right? So if we go into the flow, specifically in unusual whales, looking for some unusual activity, you see that all the filters on the left-hand side are turned off specifically. So this is just straight flow. But before we do that, pay attention to this, right? You see that the bullish premium is $6.57 million, or otherwise 56% bullish. You see bearish, you only have 43.58% bearish, right? So it is more bullish than bearish right off the bat, right? Now let's go look at the breakdown in charts. First of all, look at these pie charts. It's pretty much they're solid green. It's awesome to see. But here we are, essentially November 19th. You see that we are more bullish than bearish. December 17th, the other monthly, we are more bullish than bearish. Obviously, anything in the middle, same thing, right? But the consensus is back here, January 2023. So long-term projection, people see this as being more bullish than bearish, right? Now, at what strike? Well, we're sitting at 141 today, so the 140 obviously stands out. The 150 does as well, but also the 160, right? Pay attention to that. Specifically, if we go back in and start filtering, let's just go ask only, and let's get out of the money so we eliminate some of those other little contracts. I mean, first of all, look at this chain. Like, this is ridiculous. But we can go look at the charts specifically. Now we are sitting essentially here, November 19th, December 17th, January 2022, and then January 2023. Again, what strikes specifically? You have the 145 now that stands out, the 150, and the 160. Right. Again, I am very bullish on this company long term. In the short term, I am still very bullish on this company. I do feel that that 17% dip was an overreaction from Wall Street. Again, they have a tendency to do that, especially with any kind of little minor change. It's seen as a very negative catalyst. To me, that is not a negative catalyst. Appointing a CEO that comes from a SaaS business model is only going to put Splunk in a much better position to achieve what they're wanting to do, right? With the development of AI, autonomous driving, as you saw in the video, they're getting ready to make this leap forward. This is only going to help propel them faster towards that leap, right? Again, December 17th, you see being very, very bullish over bearish. Specifically at what target? You see now that the 160 stands out, right? So I am favoring the 160 call for December 17th. I am thinking about doing a call spread on this, so it means I will play a couple different expiration dates at potentially this 160. When I do choose which plays I will play, I will post those on my IG and my Twitter so that you guys can see. Again, that doesn't mean you need to go play what I play. Please do your own research. Please do your own due diligence. Please do your own risk management in regards to your own money, right? I'm just a guy on YouTube who's trying to help people. But if you go looking at the dark pool data, as you do see today as well, there was some pretty large buying, specifically for Splunk. This is something I'm starting to dive in more and more into. Again, it's interesting me more and more now that I've heard Dark Pool Wizard speak on Just Two Trades last week. He will be speaking this week. I made a mistake in my last video. I said that he would be speaking Monday. That actually got postponed to later in the week. just stay tuned, pay attention to the Twitter feed for Unusual Will. He will post when that conversation will happen with Dark Pool Wizard. If you're wanting to learn about dark pools, he is definitely the person you want to listen to. Again, I love Unusual Wills and how they are always trying to help retail specifically. So it's always good to have their Twitter feed as one of your favorites with all the alerts turned on so that you see every single thing that they are posting. Because again, you're going to get nothing but great information from them, which is only going to help you in the long term, right? But I think you guys get the point. As always, if you guys have questions, leave it down in the comments below. Or as always, you can always hit me up on Twitter or IG, and I'll catch you guys in the next one.